The S&P 500 may be down today, but it's climbed more than 9% since early June. What's keeping the bulls running, and will the market melt-up continue? Jeremy Siegel, professor of finance at the Wharton School of Business, says the Dow will hit 15,000 by the end of 2013 and could go much higher than that. Professor Siegel joins us live from Philadelphia. Sir, it's good to see you.
Good afternoon.
Why have we had, we've been talking a lot on this program about trying to solve the market mystery, if you will, this recent run that we've had that have taken stocks within earshot of a 4.5-year high. How did we get there, and why are we here on the Dow?
I think there's three important factors. Certainly one of them was Mario Draghi saying, we're going to do what it takes to prevent a blow-up of the European exchange mechanism, the euro, and in particular the banking system. There's less anxiety about Europe. Now, their long-term problems are still very serious, but certainly short-term there's less anxiety. The second factor is that second quarter earnings came in fairly good. 65 to 70% beat on earnings. I knew they fell short on revenues, but bottom line, what determines value is those earnings, and they did. And then a third factor, which I think is underestimated, is the recovery in the housing sector. I mean, I think the evidence is now undeniable, and that is really the sector that caused the crash to begin with, the worst performance of housing since the 1930s. Directly or indirectly, 25 to 30% of GDP is tied to that housing sector, and I think we're finally seeing the rumblings of a real recovery there.